Last month, the US Nonfarm Payrolls report shocked the market with solid job growth. This raised expectations that the Fed might delay its rate cut further. Along with the US-China trade deal in early June, the jobs data caused significant volatility in the financial markets. This month's NFP report will be released on the 3rd of July at 3:30 p.m. GMT3. With the Iran-Israel conflict and the US getting involved, this jobs report could be crucial in understanding the current state of the US economy and how the Federal Reserve may respond. Watch until the end of this video for expert NFP predictions and the potential trading opportunities. Before we dive in, don't forget to hit the subscribe and notification buttons to stay updated with the latest trading insights. In May, the non-farm payrolls report exceeded market expectations, with a solid increase of 139,000 in job growth while the unemployment rate remained unchanged at 4.2%. On top of that, wage growth also ticked higher and shocked the market with an increase of 0.4% month-over-month and 3.9% year-over-year. The healthy look of the US job report delivered a surprise to the market and sparked volatile moves. The US dollar surged immediately after the report, but quickly reversed as the market focus shifted to the US-China trade negotiations. On the other hand, gold prices sank due to the strength of the US dollar and the lowered chance of a Fed rate cut in June and July. The trade talk between the US and China has put crude oil into a strong rally, and the asset continued to surge following the NFP report. The three major stock indexes also strengthened on the solid job report. To trade around the NFP release, it's crucial to watch the forecast numbers. These can give you a solid idea of the major market moves ahead in Forex, commodities, and stocks. This month, non-farm payrolls are expected to rise by 120,000, while the unemployment rate is forecasted to increase slightly to 4.3%. On the other hand, wage growth is expected to slow down slightly, with average hourly earnings projected to rise by 0.3% month-over-month and 3.9% year-over-year. Now, let's break down the potential trading opportunities for three key assets that could experience high volatility. Stay with us until the end for some exciting trading ideas. First, let's take a look at the US dollar index. The index has dropped to its lowest level in over 3 years, amid concerns about potential US rate cuts and the political factors influencing the Fed. Currently, markets are pricing in a 25% chance of a rate cut in July, with further cuts expected by the end of the year. The market anticipates a slowdown in both the US economy and the labor market, which could push the Fed to cut rates in July. If average hourly earnings come in weaker than expected, especially given the weaker jobs report, the dollar could continue its decline. A weaker than expected NFP could push the dollar lower, potentially testing 96.89 or 96.68. On the other hand, a stronger NFP could see the dollar bounce back to 97.60 or 97.87 resistance levels, and possibly continue rising. Next, let's talk about gold. The precious metal is trading around $3,300 ahead of the NFP. If the NFP comes in stronger than expected, we could see gold prices fall, possibly testing $3,245 or $3,200. A move below the 200-period simple moving average would signal further downside potential, with resistance around $3,324 to $3,325. Finally, the S&P 500 saw a rally in technology and banking stocks, pushing it close to record highs last week. The US and China have finalized a trade deal, which will boost optimism for S&P 500 futures. Investors are closely looking at the upcoming jobs report, which can help to drive this bullish sentiment further. A stronger than expected NFP data would boost the S&P 500 to test 6,230 or 6,250. Conversely, it would pressure the S&P 500 to test 6,107 or 6,088 amid the slowdown in labor market expectations. The above recommendations are only for your reference and should not be considered trading advice. If you find this video helpful, let us know below and remember to like and share. Don't forget to click the subscribe and notification buttons to keep up with the market updates. See you next month.